Hey everyone, welcome to Toonie Talks. If you're Canadian and want to save for retirement while paying less tax today, you've probably heard of an RRSP. But what is it, and how does it actually work? In this video, we'll break it down in simple terms, so by the end, you'll know exactly what an RRSP is, how much you can contribute in 2025, and how to use it to build long-term wealth. What is an RRSP? RRSP stands for Registered Retirement Savings Plan. It was created by the Canadian government in 1957 to encourage people to save for retirement. Here's the beauty. When you put money into an RRSP, you can deduct that amount from your taxable income. That means a lower tax bill today. Your investments grow tax-deferred inside the RRSP, and you only pay tax when you withdraw later, usually in retirement. Contribution limits. 2025. For 2025, your contribution limit is 18% of your earned income from last year. If you didn't use your full limit in past years, the unused room carries forward. You can find your exact RRSP contribution room on your latest CRA Notice of Assessment. People often ask, should I put money in a TFSA or an RRSP? Here's a quick comparison. RRSP. Contributions lower your taxes now, but withdrawals are taxed later. Best if you expect to be in a lower tax bracket in retirement. TFSA. No tax break up front, but withdrawals are tax-free. Best for flexible savings or if you expect to be in the same or higher bracket later. Many Canadians use both, depending on their goals. What can you hold in an RRSP? Just like a TFSA, an RRSP isn't just a savings account. Inside it, you can hold cash, GICs, stocks, ETFs, and mutual funds. Special programs. There are two big RRSP programs worth knowing. Home Buyers Plan, or HBP, you can borrow up to $35,000 from your RRSP to buy your first home. You don't pay tax on the withdrawal, as long as you repay it over 15 years. Lifelong Learning Plan, or LLP, lets you withdraw up to $10,000 per year. Common mistakes to avoid. Over-contributing. CRA charges a 1% penalty per month on the excess. Withdrawing too early. Any RRSP withdrawal, outside HBP or LLP, is taxed as income and your contribution room is gone forever. Forgetting the deadline. RRSP contributions for 2025 are due by March 1, 2026, to count for your 2025 taxes. So to recap, an RRSP helps you save for retirement by lowering your taxes today and letting your investments grow tax-deferred. You can contribute up to 18% of your income, use it for special programs like buying a home or education, and it works best if you'll be in a lower tax bracket when you retire. If you found this helpful, hit subscribe for more Canadian money tips every week here on Toonie Talks, and tell us in the comments, do you prefer saving in a TFSA, an RRSP, or both? We'd love to hear how you're planning for the future.